Okay, guys, we are live and kind of an uneventful day in the market. You had the small caps; they took a real shellacking today. They were down 2%. You had the S&P 500 down 0.4%, and then you had the flight to safety again with the mega cap big tech stocks, where everybody just wanted a piece of that action with Tesla and Netflix and Apple. People are just flocking into those names. Then you got a little bit of a sell off there at the end that really paired people's gains on the day. Some of the big names that really took off today, you had the energy sector that was just ramping higher throughout the day with Saudi continuing to cut production. Also, you had the cannabis stocks, they're continuing their rally. So really the two highlights for today's video, I want to talk about energy, I want to talk about the cannabis stocks. Are there opportunities in these two areas for traders? So we're going to talk about that. Make sure you also like and subscribe to this video, or not to this video, but to this channel, and make sure that you are supporting the channel by clicking that little notification button so that you can get all the push notifications sent to your phone each and every day. All right, guys. Cannabis stocks, they're really taking off right now. CGC, MSOS, you've got MJ, you've got a lot of different names that are just really doing well over the last few days, and you got the volume to back it up. Another popular one is TLRY, Tilray. So is this a time now to be getting into them? Is it really a time to be booking gains? I know one of the things that I've seen with a lot of traders in this area of the market is that they're deep in the red. There's been a lot of losses over the years because if you look at these stocks like MJ or CGC or TLRY, they look like an inverse ETF that's been long over the last 3 or 4 years. It doesn't look very pretty. There's been a lot of reverse splits. There's just been a lot of problems, lawsuits, all that stuff. So let's go ahead, jump right into the stocks here. Also, make sure that you're posting your questions. If you have any, post them in the comments here. I want to hear from you guys. I want to see what you guys have to say. We'll go through them and make a good video out of this. First up, we have CGC. So on the surface, you look at this and you're like, man, look, it's breaking out. It is below $1, which I rarely talk about these, but CGC has been one of the hallmark cannabis stocks for a long time. So you got this nice basing pattern. Technically, it looks really nice. You got some strong volume here coming in 2 out of the last 3 days when it's been trading to the upside. But it's really fool's gold. You hear that expression. My mom used to always say to me, not everything that sparkles is gold. That is very true with this particular stock, really the entire industry, because I think there's a lot of traps there. Of course, you had this declining trend line that's lasted most of the year, finally bottomed out. Price broke through the declining trend line, but didn't really make that big leap higher. And then you got what looks like a breakout opportunity unfolding here today. And it doesn't look like it's too late to get into the game. The problem is like, how do you manage risk in something like this? Let's say you put $5,000 down on it. What would you do to manage the risk of this? Because if it goes from 68 cents today down to 53 cents, you've lost a lot of that money. You've lost, probably around 20% of your trade, if not more. I'm not trying to do exact math in my head here because I don't usually do too good at that. But nonetheless, you have a nice basing pattern, but the difficulty is going to be in the risk. So let's look at some other ones here. What about MSOS? This is also a very popular one if you look at it. Look at how much volume has been poured into this one over the last 4 days. And why are these things going up? Because they're changing the classification of cannabis stocks, which gives a lot of people hope that this is going to become more commercialized and more profitable for these companies. As a result, you have this big takeoff here. So a couple of lines I want you guys to be mindful of here. Yeah, you got a big breakout here. It took place at around $6.31. Now it's trading at $8. A lot of people are going to be chasing that, especially after they see the charts today. They're going to keep piling into it. But what you're going to see is that a lot of people who have been making a lot of money off of it, they're the ones that got in before it ever even broke out. These are your long-term investors. These are people that are probably buying at the beginning of the year. They're seeing this big move. They've been underwater for all of 2023. They're seeing this move, and they're like, you know what? I'm going ahead and I'm taking a profit. I've waited too long. I stayed in this trade for far longer than I expected. It's time to move on. And that's what they do. They move on, and they get the rare dub of one of these cannabis ETFs. So right now, I would not be chasing something after like what you're seeing here. You have another resistance level that was broken here as well, now acting as support. What it could end up doing is trying to pull back to one of these levels. Maybe it's to 663, or maybe even further down to like 617 or 615. Look to see if it wants to bounce at that level. If it does, then I would probably try to get in on that kind of a breakout. Then it'll be well off of its overbought conditions, probably even oversold, and then probably offering up a decent bounce opportunity with a manageable risk side to the trader, at least better risk management opportunity than what you would have had if you're buying it right now at $8. Yeah, there's no way to really manage the risk there. So the other thing I want you to be careful of is when I'm looking at MSOS. Remember, I was telling you there's a bad history to these things. I mean, this is from 2021. It looks like an inverse ETF that has a huge element of time decay and going all the way back. Every one of these pops, yeah, there was usually news surrounding this stuff. Oh, this is, we're going to get, more commercialized with this, and it's going to be a much more better profit opportunity. Congress is warming up to the idea of making it legal. And then it just completely falls apart. It just sucks people in, like what you saw here in February of 2022, and then it falls apart even worse than it was before. And we've just seen a history of this. I mean, even back in October of last year, huge rally, and then it completely sold off again. So it's, like I said, it's kind of like fool's gold. I'm not a huge fan of it. Wouldn't recommend people getting into these things by any means. So that's MSOS. What about, let's take Tilray, another popular one. TLRY. From a technical standpoint, it actually is somewhat intriguing. I think it's overbought. Yes, it has a lot of volume in it, but I wouldn't be trying to buy it here just because it's made this run up from 224 up to 3. Talking about almost 50% there. Doesn't make sense to go buying something that's made that kind of a move over the last few days. But you do have an inverse head and shoulders pattern. So let's go ahead and draw that for you guys here. You got your left shoulder right here. You got your head, and then you got your right shoulder. So what do I mean by inverse head and shoulders patterns? It essentially looks like the silhouette of a human being. You got your left shoulder right there, head. See how it comes up, and right shoulder, except this person's upside down. Inverse head and shoulders patterns essentially the opposite of a head and shoulders pattern. Head and shoulders patterns tends to take place at the top of the pattern, inverse at the bottom. So it's close to breaking out here. But as you can see, I don't really want to go chasing something that's almost made a 50% move, especially when it's trading under $10. Very unreliable, very sketchy. And past moves have suggested that these are probably going to be another move that just falls by the wayside. I hate to be the bearer of bad news. I've watched these cannabis ETFs for probably the better part of 4 or 5 years, and they've never really impressed me. Now, what else do we have here? We have MJ. Boy, this one's taken a real beating over the years too. So MJ, four days in a row, going from 293 to another about like 30+% move. You see where, the resistance broke through it. If I'm looking to get into it, I'd rather be buying it off of a support level that it previously was resistance and broke through than I would be trying to do just because maybe it broke above the 200-day moving average. Who cares? There's really not much history with the 200-day moving average, so I don't see it as being that significant of a gesture. So with MJ, it's very much like CGC, very much like Tilray, MSOS. You're bottom fishing here. You're hoping that something happens. Yes, it's really nice volume that's happened over the last 4 days. I just wouldn't trust it. Now, we also have seen a lot of strength in the energy sector. Energy stocks are just, ripping higher. You have oil trying to get towards that $90 mark, which is absolutely crazy, especially when you think about it wasn't too long ago we were trading below $70 and we're like, hey, are we going to fill up that strategic petroleum reserve, the SPR? And now what a blown opportunity that was, because now we're trading closer to $90 than we are to $70. And there's really no end in sight yet for oil, especially with Saudi Arabia. They're looking in OPEC. They're looking to keep the production levels at current levels going into the year end. They're going to keep those cuts in place. So what are we looking at here? Let's pull up USO. It's not usually the one that I go after when I'm wanting to dissect oil. Usually I go to the crude futures, but this chart has been pretty interesting here. So for a while there, you go all the way back to July of last year, it's been consistently bouncing off of this resistance level and moving lower. Then we finally got a breakthrough here in July. We rallied some, and then we pulled back to this breakout level. And then over the last 2 weeks, it has just been monumental, going from 70 to 77. it's getting a little bit stretched here. I can see where it pulls back some here in the near term. But if crude continues to rally, yeah, USO is likely to continue following in its place along with all the other oil stocks. The individual oil stocks themselves don't look that bad. XLE, the sector itself, it's getting a little bit overextended, but there's still a lot of good names there that have not made similar moves just yet. One of them that I would look at, if you're looking at it from more of a long-term play, I like EC some. I just like this huge basing pattern that goes all the way back to June of last year. Close to breaking it. I like the consolidation underneath it. My ideal stop loss would probably be below Thursday's lows of last week, 831 lows. That would be one way to play it. If you wanted a little bit wider, you could go even below the lows from August. That would be an area just below 11. And then wait for this breakout to happen above resistance to get long on it. You also have Hess. Hess, you can see trading at these recent highs here. I don't think these are all-time highs. Yes, they are all-time highs. I didn't think it broke those previous all-time highs, but yeah, so it's making new all-time highs here, trying to at least today, trying to break those highs from early January. Nice resistance level, trying to push through it. Got a little bit of a shooting star candle there possibly today, but can it hold that level and start to push higher? If it continues to hold that level and starts to reverse the selling that we saw this afternoon in HES, that could be a good opportunity to get long. Also, my stop loss would be below the lows from 831. And I see you guys coming in today. All right, we got Marcus, we got Alpha, we got Eric. I got y'all's charts there. I'm going to go through them for you guys. Continue to keep posting them there if you want me to go through your charts. Love doing this with you guys, so don't be a stranger. Also, the other thing that could happen with Hess, let's say we're at a top here in oil. If we start to pull back some, watch this rising trend line off of the July lows from last year. That could offer a good level of support as well, all the way down to 134. That would be a really good opportunity there to get long on something on the pullback. So you have the breakout or you have the pullback. That's it's really one's preference. Some people prefer pullbacks over breakouts. If you're into the pullbacks, then you got to wait kind of a while in hopes that it pulls back to that trend line. Okay, let's see. Valero, this is one that has my attention. I've been watching this one, bull flag pattern. Tried to break out today, didn't do too well. You see a lot of energy stocks fade this afternoon. They started off strong, but didn't really hold up too well to the selling in the S&P 500. So you had the bull flag pulling back. Watch this tomorrow to see if it reverses higher, but that's like a textbook bull flag pattern there. I really like that one. Stop loss for me on this would be below this 128 level, probably like 128.35 would be my stop loss. CVX, Chevron, CVX. Let's look at this. So a lot of lines on here, guys. I mark this one up all the time. This is one of my big regrets in my dividend portfolio. I bought this one back in October of, it's probably before that. I bought it early 2022 or late 2021. I don't remember exactly, but I bought it. Actually, it had to have been probably 2021. Bought it around like $80, $90 a share. And it had it like an 8% dividend at the time. I bought it for the dividend portfolio within like 7-8 months, I guess. Around this period here, I went ahead and sold it. Made 100%. I guess that's the most regretful 100% trade I've ever made. But I really wish I would have kept it for the dividend. Nonetheless, I could have gone back in it. I could have gone in it lower than what I did. But I've been kind of waiting for a pullback in oil. It just hasn't materialized. But what I'm looking at here is more of the short-term aspects of it. So what are we looking at from a short term? Is this one setting up for a breakout? I think CVX looks really good right now. I think one thing that it could do that wouldn't be bad is if it consolidated some just above this 200-day moving average, which is the white line here. If it could consolidate there and then maybe hold this 165 level, that could offer a little bit of opportunity to work off some of these overbought conditions and then start to ramp higher. That could provide a good reward risk opportunity. Now, I think I have gone through all of them. So what I like to do now with this particular part of it is I like to go through some of your charts. If you guys have anything you want me to look through, keep posting them. I see right here, we'll start off with Starbucks. You like that? I do picture in picture of myself on this. Okay, let's go to Starbucks. The biggest thing with Starbucks that has me concerned, and I've been watching this for a while, is what looks like a topping pattern on Starbucks. Now, we got the classic, let's breach the support level and then jet right back up. We've seen that happen quite a bit from, I would say, about 2016 onwards through 2021. Then 2022, we didn't see that as much. We actually saw head and shoulders patterns confirmed to the downside. This reminds me a lot of before 2022, where we would break just below it right here and then just go ripping right back higher. But now we're finding ourselves, that rally didn't hold for that long, and we're back at this support level. This is a big support level. I think if we break it again, we want to watch for whether or not it can break previous lows from 824. Does it break below that 93.71? If that does happen, then we are probably talking about a serious head and shoulders pattern here that's confirming. You still have that downward trend line too off of the May highs. That one has yet to be broken. So where we rallied to was right up against this trend line, and we fell right back down again. So there's definitely some resistance. If you're wanting to get long on it, I'd have to see this thing clear the 99.50 level, because you also have some resistance right here too that it needs to break above, as well as breaking above this declining trend line. So a lot of struggles there for Starbucks if it's wanting to really change the tide for itself. But to the downside, if it breaks below that 96 support level here and then breaks below the lows that was established in late August, then the bears really start to pick up the momentum there. I knew that we would get a Airbnb question today. I just knew it, because that thing has been going crazy today, being added to the S&P 500. Not exactly today, but pretty soon it will be. Airbnb. Let's look at this one here. Big gap here. What people get intoxicated with is chasing these gaps, man. These gaps can be really dangerous. So if you got into it today at the open, yeah, you're up a little bit on it. But man, if you saw this thing moving up, or it was up 9-10%, or I wouldn't say, I don't think it ever got 9-10%, but if it got up to like over 8%, which I know it did that, then you could have been enticed to get into it, and now you're already down on it. It's best to, especially when something's being added to the S&P 500. I know the theory behind it that, they're going to be getting a lot of buying because all the ETFs, which is true, the ETFs have to add them to their portfolios. Like SPY, for instance, has to add Airbnb, right? But in doing so, it's really kind of like a short-term thing. Eventually, the technicals do start to play back out again. For me, on Airbnb, there's a lot of resistance at 157. It's currently trading at 142. Not much support until you get back down to this 123 area. So the reward risk ratio is not that good on Airbnb to get into it at this point. But if it can continue the rally, if you're in it, I would be watching this 5-day moving average, just seeing how it corresponds with that. If it starts to pull back and break back below the 5-day moving average, that could be a good indication that the momentum is waning from the announcement that they're being added to the S&P 500. Good stuff. Can I look at Amazon? Absolutely. Let's look at Amazon. Rising trend line going back to March of this year. That thing has held up really well. I mean, a lot of them are starting to break. You've seen a lot of the January trend lines. Almost all of those have broken. So now you're looking at some of the March trend lines and whether they're going to break. Amazon hasn't broken it. It's come very close. It's rode it pretty closely, especially here over the last 2 weeks. But it's a tough trade from a couple of scenarios. You have this resistance level that's very significant. The last 2 times we've tested it, right here and again right here, which was in August, we saw sharp rejections. So it also shows that it's part of that major topping pattern that was formed back in 2020, 2021, and 2022 that eventually confirmed. That's that same resistance level. So 145 is pretty huge for the stock. So if it does bounce off of this trend line, 145 comes up pretty fast, 144, 145. And it's a lot of times when you get these longer term trend lines, it's not a perfect number. It's not like 145.3. It's usually like a 144, 145. I mean, there's cases where it's not, but most of the time it's usually a area there that you're working with. So declining resistance here was broken. So now it becomes support. You have converging support underneath with that rising trend line off of the March lows. So I think there's a lot of good support underneath. Technically, it's a decent reward risk ratio if you wanted to try to play it up to like this 144 level from the current pricing. It's like 2 to 1 plus. So not a bad there. But if you're looking for a large percentage gain, if you start putting stop losses below like 130, that becomes a little bit more dicey because you're not getting a good reward risk ratio. If all you're looking to do is book profits at 144, 145. REITs are decimated this year. What do you think about O or VICI for a 3 to 5 year position? Wow. 3 to 5. That's always pressure right there because you never know what's going to unfold. I mean, you got a presidential election coming up. God knows what's going to come out of that. In terms, don't matter who wins. I think it's going to create some craziness. But they have been decimated. O got destroyed today, down. And it doesn't sound like 1.69% is a lot, but when you're breaking a major support level like right here that I've had drawn for an extremely long time, for a couple of years, and you're starting to see that break down, that's a concern right there because now where's the support? Where's there a support for O at? I don't like it from a 3 to 5 year standpoint. I would be waiting for maybe a bigger market pullback to see where O settles in at. And, if we get that recession or if we get a big collapse in the market, then maybe O could offer up something. But right now, I'm not a huge fan of what I'm seeing here with this O. VICI. And I'll be honest, too. REITs aren't my favorite. I mean, I own some REITs and some dividends and stuff. I don't necessarily like to swing trade them as much as I do to own them. And I know that he's talking about from a 3 to 5 year standpoint. But, man, it's hard to feel good about a lot of them at times. Narrowing range on VICI. Boy, you could have some breakdown if it breaks below this 29.40 level, currently trading at 30.82. I like the narrowing range. I mean, it's rallied a lot off of those 2020 lows. Holy cow. I don't see an edge that would necessarily make me want to get into it from a technical standpoint. I don't know what the dividend is on these, but from a technical standpoint, I don't really feel it. I mean, these look more like topping patterns here that could get kind of dicey. All right, Kevin from the Trading Block. This guy is a good charting guy, man. I like a lot of his charts. Mentioned UAL on the Trading Block. What do you think? Trend line and the 200-day moving average is what I'm saying. Let's look at UAL. I must have missed that one. Yeah, look at that. So there's definitely a history with this 200-day moving average going back to about March of this year. Let's see these trend lines here. Got some of that too. Boy, it's barely holding on to that trend line off of the October low. So I think tomorrow's going to be a critical day for it, especially if we end up seeing a break below not only the trend line, but the 200-day moving average. That becomes a huge problem. Got some resistance here at 55. So there is an opportunity for like 10+% move before it runs into any really major resistance. But that little move below, it's weird. But if I zoom in on it, it just kind of looks a little bit concerning there that it lost that. Did it though? Looks like it might have lost a little bit of that short-term support. Trying not to sneeze right now, guys. Oh, all right. I made that one. I was trying to fight that. I don't want to ugly sneeze on camera here. So it broke below that short term. It almost has like a bear flag like kind of a feel to it, doesn't it? Like that. Has a little bit of that, and then it breaks to the downside. I think that's what's bothering me the most from looking at that chart. I mean, you zoom out a little bit, you can see it a little more clear. You have the downtrend, lower lows, lower highs, bear flag, breaks to the downside, but it's now testing this trend line. So I wouldn't want to get short on it just because it's testing that support level underneath. You don't know if it's just going to bounce right off of it or not. So there is some things going for it from the bears and the bull perspective. The bears have the bear flag. It's continuing to put in lower lows and lower highs. Today's price action wasn't that great, but from the bull standpoint, yeah, it's testing this rising trend line and holding the 200-day moving average. So the case could be that you got to wait longer on this one. Do we break back up into this bear flag pattern? If so, that could probably ease the tension that you're seeing a little bit on this chart here and start this bounce pattern that might take it back up into the 50s. Great to have you from Romania, Victor. Appreciate you being on here. Thank you, New Way. The SOXL play, man. I know a lot of people that love this thing. So a lot of times I like to go and get a better idea for what's going on by looking at SMH. I think the decisions that you can make there can be a little bit more clear by not looking at the 3 to X chart or 3X to 1 returns, because there's a time decay element that's not present in the other ETFs. So if we're looking at it from an SOXL, yeah, you've got a good rise and trend line here. This goes back to, let me draw this a little bit better. Yeah, I mean, it goes back to October of last year. It's bounces each time. So for me, ideally, man, if you could get a pullback to that $18 level, that would be pretty big. But again, it's a 3 to 1, so that is very possible, very doable. That would be one place to target. Now, when I'm looking at SMH, you also have a rise and trend line here off of the October lows. Didn't quite get there either. Ideally, again, I would want to try to play it off a bounce off of that 145 level. But what I'd want to see is whether or not it can make new higher highs. Because then if it just comes back to where it's at right now, all the way back down, it created a lower high. That's not necessarily good for a trend line perspective. You can see there was actually a double top there working for a little bit, but I think those are pretty much done and over with now, because we're back into the middle of that pattern there where it played out. So be it. It came back. But right now, I don't know. There's not a ton of edge. Well, take that back. Let's look at this a little bit. Let's get rid of some of these lines and look at it a little clearer here. Left shoulder, head, and then you got a right shoulder. So you could have a head and shoulders pattern trying to evolve there. Man, I don't know. I was looking at AMD today. I mean, AMD looked like it was going to break out, but then the reward risk ratio wasn't quite there for me. You got some resistance here that, yeah, it could, if you can get a close above this, like I'd say above 157, go above 157.63, get a close there, then, yeah, maybe it's back into this expansion mode, but it's taken such a heavy run, 143 to 156, that it could be getting tired out here. A lot of ifs and thises and that's, and trying to ride the fence on this one because I don't have a clear feel for where this stock might go from here. Victor wants to know about Qs. Let's look at the Qs. Client resistance here going all the way back to July. So we broke through that. What was it? Back on Wednesday of last week? Yeah. We broke through it. Haven't really seen a big expansion in price since then. I mean, we had the big move prior to, but we haven't had it ever since then. So what could be playing out here is if we get a pullback, we work off some of the overbought conditions here, going to move back down to this 373 level and then launch higher. I could definitely see that playing out. But right now, I mean, it's still very bullish. Similar to what I was talking about on SMH, if we're going to get a pullback to this blue line eventually, it'd be better to do that on a break of the previous high so that we're not putting in a lower high before we pull them back. It's never a good look for the trends. All right. From Facebook, we got TDW. Thank you for being here, Richard. Well, this is good, man. I mean, so this is a good oil breakout here. Looks really solid. You got a little bit of a profit taking here. I saw that with a number of them. I have one too. PSX had some profit taking today as well. A little bit concerned about it. Does it pull back further going into tomorrow or not? Remains to be seen. Watch that 5-day moving average there. A close below that could be one reason to go ahead and get out of the trade. Got a little bit of support underneath there. You can see where it even made sure it closed well above it when it broke below it back on, what was that, August 8th? That probably looks like an earnings kind of a move there. But would I get into it at this level? No, I don't think outside the ones I was talking about earlier, like EC, Chevron, BLO, I think those still look pretty good. Hess. But this one here, I mean, this one's pretty overstretched, so I wouldn't be jumping into it at this point. I'd be looking more for a pullback to the 61 level. If I was in it already, that kind of a move where you're looking at 63 to 68, probably taking a little bit off the table there. Then we got Disney. This one's being talked about a lot too because it cannot find a bottom. So it's starting to get people's attention because you got a pretty well-known company known all over the world, not able to find a bid whatsoever. Now we're talking like $81. When does it become a good buy? I know from a political standpoint, a lot of people have opinions on it. That's really not what I'm trying to get into. More so just, is it worth a buy at this point? What concerns me, and this is now a weekly chart that I'm looking at, this goes back to 2014. So this is a major support level that was broken here on Friday, last week. So broke through that support level. You also had a rising trend line that went back to 2009. That's been broken. Weekly, extremely oversold. Could we get a pop? Absolutely. And what I would be watching for on a pop is, okay, what happens when we get back up to like this 87, 88 level? Is it just going to be enough to work off these oversold conditions and then move back down to the downside? A lot of stuff going on with Disney that a lot of people are not liking right now from with ESPN, the subscription services and everything else. This one's just, if you have a 10-year horizon on it, maybe there's some opportunity there, but where I would really like to get into it, if we can get a bigger market sell-off, and yes, I would love a big market sell-off to happen before the end of the year or sometime next year. See if we can't get into it around like 47.50. I mean, that's possible. That would be a big breakdown down to this 46 level. Could be a generational buy. Oh, I didn't even see this comment. Dropping out of the sky faster than Buzz Lightyear. Man, poor Buzz. Jeez. Richard, mind giving TDW a review and general comments? Okay, we talked about that one, but I can talk about XLE, though. That was actually the weekly of XLE, which is kind of interesting. Let's go back to that. We're looking at the sector. Definite resistance at that 93 level. But if you're looking at the weekly, it doesn't look all that overbought, right? I mean, yeah, it's been a pretty good overextended is probably the better way to put it. It is overbought. But if we could break through that 93 level, holy cow, that would be monumental for the energy sector there, right? Solid trend line still in place. So that's the weekly. Daily, seeing those same lines here forming. Yeah, some resistance at that 93. That's what I'm hoping to see energy get up to before it starts to pull back again. And then what this rising trend line does, if it pulls back to this 88 level, can it get that bounce? Because if it can get that bounce, that could be another opportunity to reload on some energy plays. You can do this. Let's see. Perfect. Okay, so go back and watch this one when I'm done. I did the Tilray and SBUcks. I don't want to do rehash. I actually led with Tilray and all the cannabis stocks. So check that one out. SLB. Let's look at SLB. See what we got going on there. This one makes me laugh a little bit because going back to, gosh, what was it? It was probably like late August 22nd or so. This was looking somewhat bearish. I mean, if you pull back this charting pattern, it looked like it was starting to top out a little bit. And then it finally broke out, and then it really broke out. So really a huge change in the character of the stock over the last 6 days. I don't want to go chasing it here. I mean, I think it's good that it's breaking above these highs that were established in August. But at this point here, you want to see, can we get a pullback of some kind? So is there a rising trend line here? It looks like there could be. Yeah, so let's just give this a different color so it stands out. We'll give it purple. I use the purple a lot because it stands out well on a black chart background. So the rising trend line, this goes back to May, tested. So what I would want to see, and now it's created a higher high. Can it get back down to this 58 level? It can do that pretty quick order if it wanted to. That could be a good opportunity if it holds that trend line to play that bounce. Black Mamba. All right. AMD. That was the bull flag pattern there. Looks pretty good. Held that rising trend line going back to January this year. Solid chart. I was tempted to buy it today. I didn't do it. Main reason is where do I put the stop loss at? So if I was to have gone in, let's say 108.66, do I put it at 102? And I was like, man, it's starting to get like 5-6% stop loss. Not sure I'm wanting to do that with the market acting a little bit sketchy. So I didn't do it. Could end up regretting that. 50-day moving average was a little bit of a relationship there with the 50-day where it has struggled with it in the past. So watch that price there. That's the red line. What does it do with that in the future? Overall, it is one of my favorite charts right now. I just need to see if I can't get a better reward risk ratio on it. KLAC, man, you are liking these semis right now. KLAC is pretty good. You got again some support off of this 50-day moving average, a little bit overextended on this front. Be watching the 5-day moving average to see if you get a close below it. That might be a reason for me to either book gains or close out the position entirely. Then we have ANET. Man, so you got into AMD at 102. That's phenomenal there. So you probably played it the best way you could play it. That was buying it right off of this rise and trend line there. Where I got a little bit nervous about it was this decline in resistance, whether or not it would be able to break through that or not. Hindsight, probably shouldn't have worried about it as much, but that's the benefit of hindsight. That's good though, man. 102 is excellent. ANET. Yeah, this is another one. I mean, just really overextended at this point. If you're in it, that's a good trade. That's an excellent trade. Would I chase it at this point? No, but I would probably take some profit, do some profit taking, or just see what happens with this consolidation over the last 2 days. You got a little doji candles here at the highs. Does it continue to trade inside of each other and then break out to the upside? And then Apple. And you had some stocks today, dude. All right. Apple, I don't see a lot to work with here. Again, buying it like at 172 or anywhere in underneath. Pretty good results so far. This was the breakout right here on Apple, 182. Pushed to the upside, broke through some resistance at 187. Now it's got some decline resistance to be mindful of there as you get closer and closer to it, around 193. Might not hurt to take some profits off the table just to make sure you don't get the rug pulled out from underneath you. Yes, just like what Alpha said. Everyone keep hitting that like button. I appreciate when you guys do that. It does help me out quite a bit with the channel. MasterCard, let's look at it. That is definitely not MasterCard. All right, there we go. So you got a bull flag forming in MasterCard. Let's see if we can get that looking right. There we go. So what I would love to see happen over the next couple of days, it plays out this bull flag a little bit longer, and then when it breaks above that bull flag pattern, that's great. If it breaks down below it, that's probably a sign that, okay, maybe it's coming back down to this support level right here, or potentially like a little bit of a support level right there at 402, and you have to consider whether or not that's worth still holding for you if it starts to do that. Guys, this is a good session. It was quiet last week, and some of you guys I think were already on vacation, but it's good to have you guys back. Again, make sure to like and subscribe. I appreciate you guys watching all these videos. Make sure to listen to the podcast. Follow me on the different social media platforms. That's all at SharePlanner for the most part. If you want to listen to my podcast, swingtradingthestockmarket.com on Spotify, Apple, Google, Amazon, all those things. Big tech platforms. So, all right, guys, take care and God bless.